The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray, feeling good, Lewis. We start out the show like we usually do, looking at the DAX chart. We're looking at the 60-minute chart. You can see that after that three-drive pattern was made, we've had a pretty substantial downturn, and it looks like it could be continuing also. Now, if you'll remember, we want to bring up the FTSE because that is the one that is, I think, quite interesting because we hit a perfect 61% retracement yesterday, and so far that has held. The market's off a little bit this morning over there in the UK, so both of those are very, very important. Now, we had a big down day in the market yesterday, and I believe that it was caused by the failure of Caterpillar. I wanted to bring this up to let you folks take a look at it just to show you what was actually happened to Caterpillar while they were going crazy. I mean, the announcers at CNBC were just saying this news was so bullish, and it was up like 5%, and they were talking about new highs and everything, and all it was doing was making a 61% retracement, and it went from plus 5% to minus 7%, and that's what put that Dow down 600 points at one time. Now we've able to come back approximately 250, 300 points of that loss, so it's going to be interesting whether it can gain it all back or not, but we'll have to wait and see. If you remember, folks, the other day we were talking about a chart that our good friend John Jameson had shared with us, and that was a stock, it was actually an index that he created himself, and basically what it's looking at is a situation where you're looking at the top 10 stocks in the Dow only. Those are the top 10 stocks. You can see them: Goldman Sachs, Triple M, Boeing Airlines, IBM, United Health, Home Depot, Apple, McDonald's, Johnson & Johnson, and Travelers. And if you'll notice, it's making that same type of pattern that we were seeing in the Caterpillar yesterday. So as soon as Caterpillar, gave up the ghost, that's really what it was. That was up 160 of the Dow points. So once they gave that up, the Dow was automatically down 160 points, and the Nasdaq and the S&P were still up. But once they all started to go, selling came in. Now, whether that's a temporary phenomenon or not, I don't know. All I'm saying is, as you're looking at these patterns, repeat. One second, please. They repeat over and over again, and that's the one thing that you want to try to remember when you're looking at some of these things, what you're looking for. Now, let's take a look at one other one that's always in the news, and we've been talking about this last week. We brought this chart up to you to show you what was going on today. It could be Boeing today. You're right, Terry. Just keep an eye on that because it's very strong, just like Caterpillar was yesterday, and markets tend to repeat over and over again, so pay attention to that. Now, here's the stock of Amazon, and that's very interesting because if you remember, we were looking at this cycle last week because we made the 78% Gartley up there on the 19th of April. It was a perfect 78% retracement from the high, and it was also from high to high. You'll notice that was pretty much right on. Now, this is not a head and shoulders pattern, folks. Some people like to call it that, but it's really not a textbook one because if you notice, the left shoulder is so much lower than the right shoulder. That is an uptrend, so it's not a head and shoulders pattern. All that is a Gartley pattern from April 1st into the 19th. That's what it is. Now, if the price of Amazon hadn't gone up that much, it was trading down around 14.52 when it made that high instead of 15.65, then it would have been a head and shoulders pattern. So you need to have that left shoulder and right shoulder either equal or the right shoulder lower for it to be a good head and shoulders pattern. So what this is nothing more than a Gartley pattern with beautiful symmetrical highs from late January, which 29th, which was the new moon, and then we had the 10th of March, and then of course we had the 19th of April. So that's what we're watching now. These big down moves that we had yesterday in the Nasdaq and some of the others is actually it's very, very bearish. We've been saying that for quite some time now. Someone's asked me to discuss a little bit about the Elliott Wave, and I wanted to bring this chart up. This is from one of the Elliott Wave people on the internet who's relatively famous. And I don't count the waves. I just had a rough time. But you'll notice the way they're doing this here, you're seeing this counting wave 1, wave 2, wave 1 of 3, 2 of 3, 3 of 5. That all works, I guess, if you count waves. Now, I do it a little bit differently. I was taught by John Hill, and the way he taught me was, quite a bit, different than the one that you see. But if you take that same chart, this is the Dow Jones on the daily, and I'm not going to put any waves in. I'm just going to draw the patterns in. You decide whether you want to call it a wave 1 or a 2 or a 3 or a 5. Whatever you want to call it, you'll still see the same patterns that are there. You'll see the two Gartley patterns, the one we had on March 12th. We had another one on the 19th. And, of course, we had the big down move yesterday. It doesn't look like much here, but that's this doesn't have yesterday's down move in it, folks. Yesterday's down move broke that line down around that 24,000 level. So this is the one that we had from over the weekend for the newsletter. But this is the same chart that you're looking at, but not counting the waves. And I know that Mr. Elliott was a very, very bright guy. By the way, I don't know if you folks know this or not, but Elliott and I have the same birthday, which is July 28th. I don't know if that means anything or not, but we'll have to wait and see. The one thing that's most amazing about the Elliott Wave and the 0.618, when I moved to California, my phone number in Westlake Village was 312-889-1618, and that was a random number. When I had that phone number in 1966, I did not know what the Fibonacci numbers were. So it was really quite amazing. So we'll keep an eye on these things. But right now, these stocks do have a bearish scenario. Now, if we don't follow through today, that just means that we've had some minor support, in my opinion. We're going to have a break coming up in just a minute here, and then we have Norm Winsky is going to be our guest at the half hour. But after we come to the break here, I want to bring up what I think is the most important chart that we're looking at here in these financial markets, and that will be the Treasury notes, because we have broken through some really serious support here. And I believe we'll talk about this when we get back from our first segment of the break here, because this is really a very, very important phenomenon when the 10-year notes have gone above 3%. In fact, they're at 3.1 right now in the 10-year. So interest rates are going higher, and it looks like they're going to be going a lot higher than some people think, but we'll have to wait and see. Remember, this is technical analysis. This isn't fundamentals 101. So you've got to be able to, say this is a technical picture, not a fundamental picture. So we'll discuss this when we get back from the break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at this Treasury note chart. This is the one for the 10-year notes. This is the one that determines your interest rates on your cars, your commercial loans, all, your mortgages, all that stuff. So it's very, very important. But if you'll notice here, we have broken through the very important key support at 119.15, where we're trading a half a point under that. That is a very bearish sign. That means that we've gone above 3%. In that rate. It hasn't been that level for 10 years. 2008 was the last time it was that level, and that's when they came out with quantitative easing. So interest rates are going to go higher. Now the question is, they might really spike and go substantially higher, and if it does that, that's going to cause a lot of problems with the Treasury because they have to pay the interest on all the bonds and notes that we sell to China and Japan and everybody else to fund our debt. So that's going to be a really interesting chart to pay attention to. Now, if we take a look at the 30-year Treasury bond, this is where we were as of Friday. We were trading pretty much at the 143 level. Just give me 1 second here. I just wondered where Boeing was. And thanks for telling me that it was. Hold on. Wait a minute. You didn't see the Treasury note chart? Are you joking me? Did the Treasury note chart pop up? Oh. Sorry, boys and girls. This is a wonderful thing when you reach that magical age of 7.5 furlongs. Hold on, put this up here, and then we'll get it up here. There we go. Now you can see it. We broke below that 119.15. We're trading below the 119 level right now. And it looks like we're heading towards the 61% retracement, which is down there around 116 and change. But the Treasury bonds, as you see, once we took out that 142 and change, we went all the way down to 141.24 so far this morning. So the bonds and the notes have started to move lower, which is expected because the long-term picture in this has been bearish for a very long time. Now people are just beginning to see it. Now, part of the problem that they have is the fundamental people try to figure in what all this stuff means, and that's the good part of technical analysis. You just have to look at the chart and see if that's going to be something that's going to affect the market or not, because you don't really know. You should have a bond chart up there, Steve. I posted it in there twice. Maybe I didn't. Well, boy, this is one of those days where everything is just not moving the way I thought. Let me get this bond chart up here for you, and we'll get this up here, and you'll be able to see it here that it's quite a bit. So we'll see what's going on. Yes, Mr. Z is talking about the possibility of some problems in the wheat market. If you remember yesterday in the wheat market, we were talking about a beautiful Fibonacci retracement coming in on the wheat down at that 510, 511 area. Yesterday's low was 510 and a half. That was just a penny under the exact 61% retracement, and the market quickly rallied 15 cents from that level. So it could be moving along pretty good. So remember, every time we have and we're going to cover the grains and stuff next week a little better when we have Rich Anderson on, and hopefully Simon Onley from Sylvius Financial. Also, we're going to try to have him on to see if it's going to be what's going to be looking at it. So anyway, that's the main thing. But we've never gone, that I can ever remember, and this is over 50 years experience, where we haven't had at least one or two crop scares, sometimes over the growing season. So there's going to be a pretty good chance for us to get in some of these things, is my guess. But we'll have to wait and see. Right now, I think that the real action is going to be happening in this interest rate market, and also possibly in the stock market, because the market has turned over somewhat. We could be up sharply today, just recouping what we down more than 600 points in the Dow yesterday. But usually when you're down 600 points in the Dow, people that are long get scared a little bit, maybe not very much, but they will get scared, and we'll see if that's going to mean very much at all as far as whether it holds these markets thing. But remember that the Dow, it was a Nasdaq that was the weakest this last time, because that had been the leader, and now it's become the laggard. So we'll see, how this all works out as we look at these charts, one by one. Now the next chart that we want to just talk about, give me 1 second, please. Hold on a second here. And this is the chart of the Nasdaq. Now this has got yesterday's action in it. We'll put it up here so you can take a look at it. Here again, I will cover the yen and the euro next. Danny, let me just get rid of this Nasdaq one first. You'll notice we hit that 61% retracement on last Thursday. We had the big down move that went through the 61% retracement. We're trading just above the 61% retracement now at around 6,500, but it looks like that we're heading down towards this ABCD pattern, down around 59.74. That's down 600 points from where we are now. Now that might take some time to do that. It probably take a couple of weeks to do it, but if things get really crazy somewhere, you could probably get it moving a lot faster, to the downside. So we'll see whether that's going to hold that level or not, but we'll know. Now, one of the other things that someone's asked about is the Bitcoin, and I'll bring the chart up for this because it's starting to get more play again, and we'll see what's going on here. You'll know, hold on 1 second here. We'll get this up here. You'll notice that yesterday we made a 61% retracement for the high in March, and that is a nice little ABCD structure. So if this is correct, we should back off a little bit. But any move above 10,000 in Bitcoin now, folks, is going to turn this trend from negative to positive, because we've got higher bottoms now that have held at relatively pretty good support. Now remember, the bigger ABCD still has a pattern there at $4,000 a share, but if we can get above $10,000 a share, I believe that shot will probably not be completed. So, we don't really know. So we got to watch it to see if it can pop through this level of 9,000, and then then it could be off to the races. So we need to follow that with a great deal of importance. That's the way it looks like. What we're looking at from these levels right here. But I still think that we have Norm here in just a few minutes, but the most important thing today, folks, is the fact that where we are with this Treasury notes and Treasury bond interest rates are going to go higher. So if you've got to refinance something, do it now, because rates are going higher. We felt that for quite some time. So we'll see. Now, we wanted to cover the euro again. We still believe, this was our theme on the newsletter this past week, that the euro was heading down to the level where we are trading right now. We'll just get it up here because this is where we are right now. We're down here at this 121.60 level already, and there's a possibility we could go even lower. So we're at a real critical level on this ABCD going down to the March lows. We haven't quite taken them out, but we're very, very close. So that sets that up. And the same thing we're seeing in the Japanese yen, but the yen is much stronger. You see that yen has actually gone above the 78% level this morning. So we'll see if it's going to continue. So 877-927-6648. Stay tuned for Norm Winsky.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th, for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar taking the ABCD pattern to the next level, visit the front page of TFNN.com now. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with, I hope, Mr. Norm Winsky of Astro Trends. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning. You're in charge, my friend. I've turned the mic over to you, so go right ahead.
Okay, I thought first it's always good to review what you've forecasted so we can maybe learn something, you know. So I was on your show last on the 11th because we were just ahead of a giant cluster of top-notch planetary events, my very top things, and also there was a new moon coming up, and so we'll go through these quickly. And we had my two top planetary events are due to when we're here on Earth, that's called geocentric, and as we look out at the planets, it appears that individually speaking, that the planets look like they stop and reverse. They stop their motion and reverse their direction. When they stop, that's called a station point. And then they reverse the direction. There's two kinds of station points. One when they stop to go forward, that's called stationary direct. And when they stop to go backwards, that's called stationary retrograde. Okay, and then the big top thing that I like is from the point of view of the sun, the planets as they go around like horses on a carousel, as the planets go around and around, they also oscillate up and down. And when you get to their midpoint in the up and down, that's called zero latitude. These all tend to be very important energy points and tend to correlate with a high percentage of changes in trends in the market. So, and now in my astrological theory here, certain planets are associated with certain markets. So our first one on our list here was when Venus got to north latitude on the night of the 11th. And we'll just go through these real quick. In my Mercury's zero south latitude on the night of the 12th, and I allow one trading day either way. And there we go. And then we had a cluster with the U.S. and so forth, and Mercury was turning. Oh, that was it. Mercury turned direct over the Friday the 13th weekend, which was also the weekend of the new moon. So we had lots of stuff all mushed together in a short amount of time. And then just a couple days after the new moon, then we had a big Saturn convention where we had Saturn at aphelion. That only occurs, that's the farthest point from the sun. That only occurs every 29 and a half years. And the next day, on the night of the 17th, we had Saturn turning retrograde. So that was a big Saturn theme. Saturn is coffee. So I emphasized, I thought that it would be smart to look at coffee during that time period. And then we also had you did your, I think it was last night, you did your musical math seminar there on the music and the markets and so forth, and I do that too. And I had the 31,000, although this is a square number, 177 squared. That's 31,321 days from July the 8th, 1932. That was the low day in the 30s for the Dow Jones Industrial Average. All right, so let's look at these charts. Here's your cattle, and here's the day I had indicated right around there. There's your low within a day on the 11th, and then if you bought the cows there, you had a chance to get a nice moo, right, Larry?
Yeah, I think so.
There we go. Here's your wheat. That's beautiful. This one's beautiful, Larry. I don't know if this falls into one of your patterns or not, but you had made an initial high, you had a little pullback, little pop up. You could have sold against that high there, right around our date there, the 11th, and you could have caught made some bread there with the wheat, right? All right.
You're on a roll, Norm. You're on a roll.
On a roll. That's where the wheat gets and turns into rolls, right? There we go. And here's some good old Hoosier corn, right, Larry? So here, Hoosier corn. There we go. On the 12th, that's doing this on Mercury now. All the greens in general are Mercury. Venus, though, is also co-rolled by Venus. And corn, though, using corn as sort of the proxy for the grain complex. And there you go. You made a nice stop there. And then the corn went down, down, down. Here's your S&P during that period. The stock market is the big basket of everything, so it responds to all these planetary events, whereas the commodities tend to be narrow in their, picking up only, tend to respond only to a small number of things. And so the S&P tends to respond to all these things during this time. That period. Here's your, that's the 17th. You notice going up here, it doesn't show up real well. I got another chart coming up here, I think. Anyway, it was just bouncing. We were kind of moving up, but we were also whipsawing back and forth. I think it was about a week where we never had a day in more than one day, consecutive day in one direction. You know, it would go up and then go down and go up and go down. And I called it the pinball mode, you know. Anyway, so then we got to the 17th when Saturn turned retrograde, and that turned out to be the high of the month so far. Okay, it probably will be the high of the month. I don't see us going back to the highs at this point, right? Here's one of your favorites, Larry, gold. And there you go. You made, let's see, this is based on over the weekend there. Well, Friday the 13th was going into the weekend, just ahead of the new moon. And there's a nice low in the gold, you know. And here's your coffee. Coffee was one of my, top picks for this time period to watch. And the coffee hit a bullseye. I had the 17th with Saturn turning retrograde there on the 17th. And there's your low on the coffee. And the coffee, as of yesterday, was bouncing up against these tops here. And if we break out over these tops here, we could be making that could have turned out to be a major top there in the coffee. We'll have to wait and see. You know, maybe a few more days. You know. All right, that's what happened. Now let's look ahead. Here's what's coming up, and this is why I asked to come on your show, Larry. I'm the Paul Revere of the moon. You know. Here comes the moon, you know, right? The full moon coming up here on the 29th. We also have some other cycles emphasizing the U.S. cycles, so that would be your U.S. stocks, T-bonds, and U.S. dollar. And so what you need to do at the end of the week here in a couple of days, look at these markets that I'm going to mention now, and are they in a clear trend going up, a clear trend going down? If they are, and have a bit of a strong trend into the weekend, there's a good chance, high percentage, they'll probably reverse by Monday. So keep that in mind. And it's the old Newton law: for every action, there's an opposite and equal reaction. We just need to know what time that reaction is likely to occur. And in this case, you got big stuff happening over the weekend. So now let's talk about the full moon. The full moon coming up is going to be in the sign of Scorpio, and that goes with cocoa, hogs, and bonds. Those are our top picks for the full moon, and then we also want to look at our usual suspects for the moon, which are the financials, your grains, precious metals, and stocks. So now we're going to look ahead here. Here's your S&P. Oh, yeah, that's okay. And so how are we doing on time now, Larry? We're coming up to the break.
The music will let us know, but it'll be very, very soon. I have a question from one of our listeners. If you'd explain aphelion and perihelion one more time,
sure.
Please.
Okay, anytime. Here's a little helper how to decode all the astronomical terminology. It's a C-H-E-L in the word that refers to the sun. Helios is Greek for sun, right? So. And here's a memory helper. If it starts with an A, that means afar. So aphelion is farthest point from the sun. Perihelion is the opposite. That's nearest to the sun. You also have apogee. G is Earth. Anything G or Geo is Earth. And so if it's apogee, that's farthest from the Earth. And perigee is nearest to the Earth.
Okay, very good. Now we're going to pay a few bills, and we'll be right back with Norm Winsky of Astro Trend.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back with Norm Winsky from Astro Trend. Norm, are you still with us?
Yes, sir, Larry.
Go right ahead. Keep continuing, sir.
All right, we're on page 4. I want to talk to all you kamikaze traders out there. You know who you are, the day traders. Okay, so I'm going to, I know Larry lectures you on don't stare at the screen. I agree. You don't have to stare. There's a way to do this happy medium where you don't have to stare at the screen and get hypnotized all day long. If you know what time to look at the market, that's the deal. That's the advantage to my approach to the markets. The planets tell you when you should look at the markets. I've been on here many times and showed this before, and it's not an accident that this pops up very often, that you get the high or the low of the day. So yesterday was the 24th. There we have listed. I had the stuff listed weeks in advance. I send this to my clients. They have this for the entire month. And so there, one of the times for yesterday was 2:41 p.m. That was moon. That's the symbol for the moon. 120, that's 1/3 of a circle. It's a triangle. Trine, 1/3, and Uranus. So 2:41, moon was 120 or trine Uranus. And what happened near there was at 2:39, it's off by 2 minutes, we made the low of the day. So that's pretty interesting, So if you, I'll be telling you how you can get my letter and learn about how to do this, and all for free. So anyway, you might want to check it out. And that's this happens quite often. So I would say my intraday points, so on a day-to-day basis, work somewhere in the neighborhood of 70%. So I think it might help your timing if you want to day trade. Also, the big
Norm,
picture
we got a question from one of our listeners. How many different trade setups on time do you have each day on average? 5, 6? I mean, what is the?
Well, you probably on average you probably get 6 or 7 times during the day. Not all of them you're going to want to take that trade. It's just a time to look at the market. And as always, we want to hear the market has been going down, 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 and now we're at a key time. So that would be a really possible good setup to look for a turn. If you're in a tight consolidation, that may not be as good of a point to look at, even if not all the times are going to work, and give you a good setup, Do
you find it really helpful to only take the winning trades?
That's good, yeah.
Okay, well, I found that helpful. Okay, continue, my friend.
That'll increase your batting average.
Go ahead.
All right. Anyway, that's pretty much it. And so now I'm going to tell the folks how I got a few spots left for May. You can get the May letter and a free class that goes about 5-6 hours, individual class, just me and you on Skype. And I put my letter up here on the screen and go through my different forecasting methods and spill my brains out. 50 years of experience. I'm a former Chicago floor trader, and I spill it all out and give it to you all for free. It's unbelievable. And if you mention Larry's name, it's all free with a double your money back guarantee, right, Larry?
That sounds pretty good, Norm. That's for sure.
There you go. So all they got to do is contact me, and there we go. I'm in beautiful, sunny Florida, and there's my phone number. Probably the best way to get me, and do it right away, because on Monday, after I send my letter out this weekend, I will be calling the folks who are in the queue to get the letter and saying what time is going to be, what day and time is good for you. And I do about one a day. And so you want to be in line, because when I run out of time and spots, then that's it for the month. And you might have to wait another month. So call me. The best time to call me will be in the next 24 hours, because I'm on deadline to get my May letter out. So I'm pretty busy, but I can take 10 minutes to shoot you off an email and tell you, and maybe talk to you for a few minutes and tell you how it all works. So here's my email address. You might want to jot that down. Nwinsky at Embark, EMBARQ, MAIL.com. That was Nwinsky at embarkmail.com with a Q in there. And there's my phone, and there's my Skype. And hopefully I'm going to help some folks improve their timing, and I'm big on money management. I know you are too, Larry. And one of the advantages of this approach is it gives you a time window. It's like if you're doing the day trading, I say when it's the moon involved, I say only give it 5 minutes. If it doesn't work out in 5 minutes, you're out of there. You know, right? Or on the bigger picture stuff, it's one day. We create a box. You know, there's a box where you got your time, you got your price. Like we had some Pluto points here over the past couple days, and some of them, the cocoa turned on the, had a pullback there into Pluto turning retrograde, and it ran up over 100 points yesterday. Some of them broke their level, and they accelerated downside, like the stock market and the bonds broke their level. And so, you would have only had a small loss. So I'm big on money management too. So I'm going to coach the folks and help them improve their trading and hopefully give them better timing. So call me right away. Get a hold of me right away.
Okay, Norm, just to be sure, the full moon comes in on the 29th of April. Is that correct? That's on a Sunday?
That's correct. That's a Sunday.
Okay, and that'll carry over from Friday to Monday. So there's a little window there where there could be some pretty big fireworks occurring.
Absolutely.
Okay, good. Well, listen, go ahead. Continue on.
I was going to say that moon, Larry, that moon that works a fairly high percentage of the time. So, if you're not looking at this stuff, you're driving around the country without a map, right? Or GPS or whatever you use, right?
For sure. Well, listen, thanks for joining us, my friend, and we will have you on again when we come up with some, bigger dates. Just let us know, and we'll be happy to have you back on again. So thank you so much for joining us, and just let us know when you need to come back on again, and we'll have you on again, Norm.
All right. Well, thanks for having me on, Larry. You're the best, and you have the best audience, and looking forward to helping some folks there.
Yeah, they got some great people there, that's for sure. Okay, Norm Winsky of Astro Trend, and thanks again, Norm, and we'll be talking to you soon. Okay.
All right.
Okay.
Take care. Thanks a lot.
You bet. Before we get to the break, I wanted to bring up one other chart that someone has asked us about, and that is the chart of the Treasury bonds, again, on a shorter-term basis. And one of the things we wanted to look at here was the importance of this chart that we looked at yesterday, because we were, shucks, I lost it. Bear with me here one second, folks. Oh, dear. Give me a second. We'll put it up here. Once we took out these lows of yesterday, which came in at the 142.17 level, that told us that we had broken a major support line there in the Treasury bonds. That sets up another ABCD structure down to 125. We're trading at 142 and change right now, folks. That's 17 handles. That's a long way. Remember, these charts go down a lot faster than they go up. So that's the main thing to look at. So someone's asked a question about the coffee that when Norm was on. Let me bring up the coffee chart because I wanted to show you that because this is one that was really spot on. But the trouble is, if you missed it the first day, you had to wait and get it the second day because look what happened to the coffee, folks. It went down and took out that double bottom. And then the next day it gapped up, and that made that a false breakout. We're trading at 120 in coffee now. We've rallied well over 6 cents a pound in the coffee after that low day, but we'll see what's going on the other side. Okay, someone's asking me the question. This one, Mr. Z, I'll be happy to cover that when we come back from the break. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and our good friend Mr. Z in the room has asked why I'm so bearish on the Treasury bonds and thinking of adding to positions here, which we did. It just looks so bearish, Mr. Z, that the weekly charts are broken. We had that little dead cat bounce that the bonds could only rally about 3 points. It's just absolutely just a very negative chart. If we get above 143 in the bonds, this will be wrong. We'll cover the whole position, and then we will make a very large profit. But if it's right and we close below the 141 level, then we're going to be looking at some really much lower prices, and that's what we're looking at. I haven't posted any charts other than the coffee because it's the end of the show, so that's why we're ending up with the bonds. So the bonds, it just looks like they want to go lower based on the charts. Remember, it has nothing to do with fundamentals, folks. This is all due to the technical analysis of what the charts are telling us, and whether that's going to be happening or not, we'll have to wait and see. But it looks like it has a target a great deal lower. You're talking about 12 handles lower, and you only have to risk 2 handles, so that's 6-to-1 risk-reward ratio. So it doesn't get a whole lot better than that. So that's what we're watching here in these Treasury bonds and Treasury notes. This will probably all be related to the U.S. dollar and stuff. But remember, the stock market is acting relatively weak here with yesterday's action. That sets up a move of potentially 10% lower sometime around the middle of May. Whether that's going to happen or not, we'll have to wait and see. But it does look bearish as we look at these things here on the 25th of April. I will not be on the show on Thursday or Friday of this week. I have some things that I've had planned that I have to take care of, so I'll be back with you guys on Monday. Next week we're going to have Stan Harley on, and also hopefully we'll have Cy Monley and Rich Anderson should be on Monday. So that's what we're watching. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!